This week was the first time we heard from Bank of Canada's Tiff Macklem on what the first interest rate decision is going to be. So we'll start off by talking about where we are at today, how he sees this year going, and what to expect for the future. When are the cuts coming? But if this is your first time here, my name's Nick and welcome to Ways to Wealth. Before we get into the video, I have a huge favor, a huge ask. If you learn something new or you get some value out of the video, hit that like button. We do a new video like this every single Sunday, so make sure you come back and check out the channel. So we all saw the big news this week, and if you didn't see it, the Bank of Canada raised, but they raised a quarter basis points. That means that the overnight lending rate is now at 4.5%. And the big news is that there is a potential pause coming. So let's read a little bit more about what happened. The Bank of Canada's overnight rate will pause at 4.5%. This is big news, seeing how we've gone from 0.25% at the beginning of 2022 to all the way to 4.5% today. We need to stop and smell the roses, see what's actually happening in the economy, because we know these interest rate hikes take time, 6, 8, 12 months to factor its way into the economy just to see what things are happening underneath. He did stress though that it is contingent on the bank's forecast playing out as expected. We're looking at employment, we're looking at GDP, we're looking at factors that have led them to get to the decision today, and most importantly, that's inflation. Although on the downtrend, we need to remember that the Bank of Canada's target is 2%. So we'll leave that for later, but let's discuss a little bit about what impact this decision had in the markets. So overall, the shift was a little bit more dovish than anticipated, meaning that they weren't indicating that there was going to be more hikes coming, and the fact that they issued the statement pause, or that they were going to hold off to see what was happening underneath, means that it's dovish. And this dovish attitude actually drove the 5-year Canadian government bond yield down. Now, we've covered this in a video before about how these big banks set their 5-year fixed mortgage rates and they base it off of this bond yield. So it's so interesting to see that these interest rates actually could potentially be going down, although the Bank of Canada is going high. Now, do I really think so, or do I think these banks will hold? Well, that is something that we'll see in the next coming weeks, but we know that we're probably going to be in this range for the rest of the year. And additionally, these Bank of Canada decisions have an impact on our currency, and it actually put the Canadian dollar on the defensive. It's not a currency that is needed to be owned throughout the world, and there was some selling pressure that happened there. So now that we know how we stand today, we're going to look at what Tiff had in terms of an outlook perspective for what is going to happen in 2023. And we can see here that Macklem is projecting roughly zero growth for 2 or 3 quarters. Now, we know a recession is defined as 2 quarters of consecutive negative GDP growth. So again, Tiff Macklem is still thinking that we are going to be going through a soft landing, meaning that the Bank of Canada did a great job in terms of raising the interest rates just enough to combat inflation, but not kill the economy. If you want to learn more about soft landing, check out my video above. We go further into depth about what he has planned and what he is expecting to do. We're going to look at a chart now from BMO Economics about what their anticipated GDP outlook is for 2023. And we can see in this 2023 category that negative 1.5% is going to be the GDP for the first quarter of this year, and for the second quarter, minus 1.8%, which is definitely an indicator that we are going to go into a recession. There's so many indicators right now that are telling us we are going to go into a recession. BMO thinks this way, but the Bank of Canada does not. So it'll be interesting to see what actually happens. And it's also important to note that after Q3 of zero GDP growth, it then has us at 1.5%. So this is kind of an indicator of a soft landing. We don't have a prolonged recession. So it'll be interesting to see if Bank of Canada and Tiff Macklem actually nailed this one on the head. Now, the question that is most important to all investors and those who have mortgages: are the rate cuts coming in 2023? Well, we can see here Reuters had an exclusive interview with Tiff Macklem, and let's read a little bit about what they talked about. As things start to get back to normal at some point, yes, we will probably be thinking about some modest cuts of interest rates, but inflation is still over 6%. They're not talking about cuts. We're not even thinking about cuts. And the question that we're really asking ourselves is, have we done enough? We're pausing to assess whether we've done enough. So that is what the main point of what the expectation is for the rest of the year. Higher for longer. We're going to see these interest rates for a longer period of time until inflation gets back to that 2% target. We will probably see prolonged interest rates, and the overhanging risk to the market right now is that if oil continues to stay high, or if oil continues to bounce higher, that will continue to lead to an upward pressure or continued pressure on what the inflation rate is. So although the Bank of Canada did hit pause and the markets are definitely probably happy to see this happen, it's still realistically a wait and see game. We need to see what employment numbers look like, what GDP numbers look like, and most importantly, what that CPI or what that inflation number looks like. But if you're still here with me, I appreciate your support. Don't forget to hit that subscribe button. I hope you all have a great week in the markets. Happy trading.